Yes. Okay. Sorry. This class is on the, because we've already discussed the basic things we need: the structure, the liquidity, the points of interest, everything. We're already accustomed with what you need to know before picking an entry. But there's another thing again to pay attention to, and this is what I refer to as higher time frame directional bias. Now, what do I mean by higher time frame directional bias? I mean by observing what market is doing on the higher time frame and then trading in line with what that higher time frame is saying. Now, it's no the basic things you know about trading, your support and resistance, your trend, everything, they work. The thing is, the strategy that you just learned is a way to just it's just a way to find entries and join in with what the higher time frame is saying. Because even if you know that the market is going to buy, okay, you have the idea that price is going to buy, but where exactly is price going to buy from? That's one important thing. You know that price is going to buy, but where exactly are you going to jump in from? So that is where higher time frame conditions comes in place. Now, for example, now identifying, because we already know our trends, we know when market is trending up, we know when market is trending down. That is something that you already know from the basics of trading. So now, let's say, for example, you saw this market at this zone here. But if you pay attention to what market has been doing since, you notice what a particular pattern that price has been doing what? Price has been trending up, and you can see this trend, higher highs and higher lows. You can see higher highs and higher lows. You can see higher highs and higher lows. You can see higher highs and higher lows. You can see, so this is gold. Price has been trending up. So what does this tell you? If you open up your charts from any of these zones, you know that what you're going to be looking out for is buy. That's why if you pay attention to my gold chart from here to this zone, what was I doing? I was buying from here, from here, from here, from here. I kept just looking for buys because I understood that on the 4 hours time frame, the directional bias for gold was bullish. Understanding that aspect, the market is bullish, I am not going to start looking for sales in the market because price is what is bullish. So the higher time frame conditions is very, very important. It's only when you now understand the directional bias of the market being bullish, you can now scale down to the lower time frames, like the 15 minutes time frame. You can now start looking for the strategy that you can use to catch an entry. So for example now, only knowing that on the 4 hours time frame that we're bullish, the only thing you can do is now scale down from the 4 hours time frame and then go to 15 minutes time frame, 30 minutes time frame, and go to where price is. Already knowing that price is bullish, what you just do is go down and start looking for the strategy that you can use to jump in based on the strategy that I've taught. So understanding like your structure, your liquidity, your POI, having in mind that price is what bullish. Only thing you can now do is go down and start looking for a way to join that bullish move. So for example, from this trade, because I know that price was bullish, pay attention to this trade. This see me sell from this. No. Don't think I kept doing was taking buy here, buy here, buy here, buy. I kept taking what buys because I checked the 4 hours time frame and I found that the behavioral pattern of the market was it being on an uptrend. So all I'm going to be waiting for is when price pushes up, makes another higher high, understanding that the pattern of the market is making higher highs and higher lows. If I go down to a lower time frame, I'll be looking for market to now pull back for me to now get an entry to the upside. Now that pullback is something that you now have to start looking for your what, the market structure, the inducement, and then the entry that you can use to continue market going in that direction where the general time frame is going to. So market will always have a place that is heading to a directional bias on the higher time frame. So that is one way to trade directional bias with trends, because you can trade the trend, you can trade directional bias with trends, you can trade directional bias with range. So for example now, as price is trending on the 4 hours time frame, you discover where the pattern that price is using to trend. If it's trending to the upside, that's it being bullish on the 4 hours time frame. If you go down to the 15 minutes time frame or lower, or 30 minutes time frame, what you're going to be doing is analyzing trades in line with you, in line with market going to the upside. All these other blocks here that you see for sales, don't pay attention to them because the overall direction of the market is what? It being bullish. Let's say for example now, market is what? Trending up on the let's say 4 hours time frame, and this is what 4 hours time frame is doing, this and this 4 hours time frame. So it has done higher highs and higher lows, made another higher high. So automatically what you're expecting price to do is what? Make higher lows and then continue buying back up. Now the thing is, on the 4 hours time frame, you may not see clear zones to take entries from. If price makes this higher high and higher low and makes another what? Higher high, you already know that the behavioral pattern of the market on the general time frame, on the 4 hours time frame, is it trending up, it being bullish. And already you've already known that the pattern for market being bullish is market making a series of what? Higher highs and higher lows. So automatically, if price has done higher highs and made higher lows, made another higher high, what is expected of market to do? For market to pull back and make another what? Higher low. So because of that, I'm taking this as the 4 hours time frame. This general trend that you discovered now is the 4 hours time frame. So since this is done on the 4 hours time frame, and you already know that price is going to pull back to make another what? Higher low. The only thing you need to do is scale down to lower time frames, probably like 15 minutes time frame or anything. On the 15 minutes time frames, you can now probably see something like this. Let's say, for example, before price did this, was before price broke this structure, was doing something like this. I would say that's 15 minutes time frame. You can probably see something like this happen: higher highs, higher lows, higher highs, higher lows. Then does this, and then comes back, creates inducement and pushes back up. Let's say this is what you see on the 15 minutes time frame. But on the 4 hours time frame, it's just going to be probably one single candle that does this break of structure. But on the 15 minutes time frame, you have seen this move happen. That means, what does this mean? This means it's a double break of structure, because you've seen your higher high, higher low, higher high, higher low. It broke this high and also broke this high here. That's a double break of structure. That means that we're looking for trades in line with the current trend that the market is on. So since we're looking for buys, we already know the market is probably going to pull back to make higher low. So in that being said, now that we're looking for buys in the market, so what we do is, because we're looking for buys, we're looking for trades in line with that current direction that the market is on. And in this case, you find out where your break of structure is. So there's a break of structure, the first one, then the double break of structure here. So that being said, you are getting the structure part of the strategy, which is the break of structure. You now look for your what? The liquidity part of the strategy, which is your what? Your inducement. All this on the 15 minutes time frame, 30 minutes time frame, there's no lower time frame. The general time frame on the 4 hours is just to determine the direction that the market is going to. So since you marked out the structural part of the strategy, marked out the liquidity part of the strategy, which is the inducement, you now look for the POI. So either this breaker here, depending on the one that's closest to inducement, if it's this breaker here, then you now look for price to on the 15 minutes time frame, pull back and trigger your POI. Now, this is happening on the 15 minutes time frame. Meanwhile, on the 4 hours time frame, you just see one single candle pull up and another one probably pull down and then continue going up. So this being said, you already understand the direction of the market on the 4 hours time frame and know what market is heading to. So instead of looking for sales, you focus on taking trades in line with that direction that the 4 hours time frame is going. So you take this first buy on the 4 hours time frame, move that to lower. So understand, that's what you keep doing, taking the buy until price makes another higher high. Now market will not just move once on 15 minutes time frame and hit that CP. Let's say, for example, now market is doing higher highs and higher lows on 4 hours time frame, higher highs and then higher lows. So now, since 4 hours time frame, can be like 1 or 2 or 3 candles to break this last high. But on the 15 minutes time frame, it can possibly take like 2 days, 3 days. So market can go on the 15 minutes time frame, go here and stop, and then come back again and start looking for another entry, trigger the entry here, push up again and stop. Now pull back again, you move for another entry. As long as you know that you're supposed to be taking buys, because on the 4 hours time frame, what market is doing is higher highs and higher lows, higher highs and higher lows. So far as market has not completed that trend of higher highs and higher lows, so it does not completed another higher high, it means that you're going to keep looking for buys until market breaks this high and makes another higher high. Then you stop looking for your buys. So on the 4 hours time frame, it can be 3 candles, 4 candles. But on the 15 minutes time frame, you can see multiple opportunities to be taking buys. So you can take your first buy from here, happen to get another entry and take another buy from here, happen to get another entry, take another buy from here, until market eventually completes the pattern that is following, that is higher highs and higher lows. So that is directional bias for trends. So once you understand the trend that market is on, you can better know how to trade it on the lower time frames. So now, this is what I mean now. You can see these higher highs and higher lows. Higher highs and then higher lows. So as market made this higher highs and then pull back and made a higher low, what I'm going to be looking for is just to mark out where the last higher high happened, and I already know that price will what come and take out this higher high to make another what higher low. So that being acknowledged, if I go down to lower time frame, what I'm going to be doing is what looking for buys until market makes another what higher high, because I already understand the behavioral pattern of the market, that the structure that market is on is an uptrend, and for market to complete an uptrend, it has to make what higher highs and higher lows, higher highs and higher lows. So that means if market makes higher highs, it will probably come and make another higher low. If it's going up again, it will make another what higher high, come and make another higher low until the trend starts changing. So when market is on an uptrend on the 4 hours time frame and it makes higher highs and higher lows, if it makes higher highs and makes higher lows, the next thing that's going to come from the market is what? Another higher high. So if I mark that out on the 4 hour time frame, the market will create another higher high. If I go down to 15 minutes time frame, I'll just be looking for buys until market can create that higher high. And it can probably take days, weeks. You've already understood the directional bias of the market. The market is going to make another higher high. So you're going to be looking for only what? Buys toward the direction the market is going to. So that is one thing with directional bias on trends. Same thing as if market is on a downtrend, they're making lower highs and lower lows. So if you mark where market does lower highs, it makes what? Lower lows. So you already know the market is going to make another what? Lower high. So you start looking for sales. So marking out where the 4 hours time frame is, maybe probably with a line where the last lower low is. You now know the market is going to keep selling to complete that trend. It will take out that last low. What it means is when market pulls back, you look for sell. If market doesn't pull back, you look for another sell. If market doesn't pull back, you look for another sell. That is how to trade using trends. Now, aside from trends, there's another one. That is who's raising their hand when I'm teaching, like why? There's another one that is trading it with a range or with support and resistance, like zones. Now it can be your support zone, your resistance zone, your demand, or your other block on higher time frames. The thing is, any reaction that market will give you, support and resistance works, but it depends on the time frame. If you have a support zone on 1 minute time frame, you can pay attention to the price that can come to your support, give you a little bit of reaction, then what? Then fail. But that reaction at least made a move in the market. So the same thing, if it comes to 30 minutes time frame, it will give probably give another reaction again before it fails. If it comes to 1 hour time frame, it will probably give another reaction again, then fail. If it comes to 4 hours time frame, so the higher the time frame, the longer the reaction is going to be. So if, for example, now you can come out in your market and you mark out, let's say this is a support zone, and then this is what a resistance zone, and price happens to what go from price has been traveling, and then from here it pushes back up to this zone, which is the resistance zone. If price comes here, we are probably expecting price to want to sell, because that is what support and resistance is. But before I can start looking for sell from here, I would want to, I'm counting this as the 4 hours time frame. Now, if I can start looking for sales from this zone, I would want to scale down to lower time frames, probably 15 minutes, 30 minutes, but 15 minutes is fine. And I want to see markets give me the strategy that I use for trading reversals, which is when you get what? A market structure shift to the downside, the inducement, and then your POI ticket sell. So let's count this as 4 hours time frame. That this is where market is at. On the 4 hours time frame, it's at a resistance level. We can really know that price is supposed to start selling from there, or after the 4 hours time frame. But before I can sell, I would expect to, I'm not thinking that I was still on 15 minutes time frame. I would expect, let's say, market approaching this on the 4 hours time frame, it approaches one single candle, like 3 candles. But on the 15 minutes time frame, it will probably approach with a pattern like this, uptrend, higher highs, higher lows, higher highs, higher lows. Then it comes here, clicks this zone, and happens to what? Make a lower low. If market does something like this and broke this last low, I'm getting a confirmation now that this zone is going to hold for a sell. Why? Because price came to that zone on the higher time frame. And actually gave me the strategy that I trade for reversals in the market. So if price comes here, this is the pattern you already know now, market structure shifts. So if price comes here, does higher highs, higher lows, higher highs, higher lows, higher highs, then it comes here and breaks this last low. I've counted the market structure shifts. If it also comes creates inducement, I've counted my what? My liquidity part of the strategy. Now I'm look for the POI next to it. So price will now probably come here and what? Start selling. Now, you now start marking for other zones that price can possibly react from. So because of your trading range, let's say from support to resistance, you've already gotten a strategy that you can use to take the sell. The only thing is that you now continue selling until your price gets to another zone where it can cause another possible reversal from, which is this support zone down here. So what you do is take sales on the 15 minutes time frame, keep taking sales. Now you can break here, also come down again, you look for another sell opportunity. There can be maybe a breaker blow here, take another word, sell. The price can actually do this, come down, break this zone again, create inducement, back down, then come back again and trigger this breaker, take another sell here. Continue taking sales until your price gets to another zone where it can cause possible reversal from, which is what? This support zone down here. If the price comes to this support zone and does not break past it and also comes there and creates maybe like a structure shift to the upside of 15 minutes time frame, gives you inducement, can now come here, trigger a POI and continue taking buys again until price gets to this resistance zone here. That's how to trade it with range. So the only thing you need to know is understand the direction of the market on the higher time frame, where price is heading to, where price is going to, where price is coming from. Understanding where price is coming from will tell you what you're going to be looking for. So if you already know that on the 4 hours time frame, price is selling from the support or from a resistance level here, and on the 15 minutes time frame, you happen to get a strategy to jump in that trade. As long as the price is not going to another zone for reversal, the only thing you should be looking for on this market is what? Sell. So what you're looking for is an opportunity to jump in and sell, opportunity to jump in and sell, opportunity to jump in and sell. Don't start looking for buys from any other blocks here and here. Price may react from there, but eventually you will fail because you're not trading in line with what the higher time frame is saying. Are you guys saying? Okay. Are you guys saying? Okay, good. Alright. Okay. So you're not trading in line with what the higher time frame is saying. So first of all, put your technical analysis to good use. It does not cost anything to open your charts and take higher time frame. Just take 1 minute and 2 minutes to observe what anybody that opens up their charts on gold now. Let's say you open up your chart on gold and actually went back to observe what market is. Let's say, for example, you saw the market here. This here is a good example. Right here is a very, very, very good example of the range part of it. So from the range, price was what? Selling. So I've marked out my, let's say cost markets here. This is your what? Your support. This is your what? Your resistance up here. So if you happen to catch markets here and as price came to this zone, it gave you a market structure shift on the 15 minutes time frame, gave you inducement and gave you what? Your POI, and you happen to start selling from here. You're not going to start looking for all these breakers here and also other blocks to start taking buys from until market at least completes and comes to another zone where it can cause possible reversals from. So for example, now your cost market here is selling. You're not expecting to start taking buys until price probably comes down to a support here. Okay, it comes to this support. There's a breaker here in the 4 hours time frame. But if you start buying from this breaker, you know that market is bullish. You're not going to start looking for any sell from any of these other blocks until price comes to where at least this resistance level up here. If price comes to resistance level here now and gives you maybe a structure shift to the downside, inducement, and then triggers a POI and starts selling again, you start what? You're looking for sales because 4 hours time frame can be just 10 candles to complete, but on the 15 minutes time frame is multiple candles, meaning that you can catch a sell here, price will go back down, give you another opportunity for another sell again, go back down, give you another opportunity for another sell again, go back down, give you another opportunity for another sell again, go back down, give you another. Means you can trade for a full week just selling the market. You can trade for a full week just selling the market. So understanding the directional bias of the market, depending on the pattern the market is displaying, it is very important. Here, for example, now you come on the charts and on the 4 hours time frame, you see this move happening. What is this move? This is what? A downtrend. It's very clear. Lower highs, lower lows. Lower highs, lower lows. So if you come out of the market and on the 4 hours time frame you identify this as a proper downtrend, what does it mean? It means if you start looking for what sells. It means if you happen to what scratch this trade here, it means lower highs and lower lows. You've caught one, you happen to take a sell from here. If the price moves. Let's remember, on the 4 hours time frame is one large candle. When 15 minutes time frame is many candles that you can happen to catch pullbacks on. It means you can continue selling this market from here until price gets to another zone where it can cause possible reversals from. So even if I was selling this market, what I'll be looking at is for price to come and react from this zone here. Another support zone down here, or at least this breaker block here, before I can stop looking for sales. But at least that was why I took sell here, because I already understand that the direction of the market at that moment is what? Bearishness. So the 4 hours time frame will give you the pattern, what the market is saying generally. Then on the lower time frames, you can afterwards looking for trades in line with that current direction that market is on. Can you guys hear me? I even thought something was going on. Okay. So, like I was saying, I've already taught this thing with the trend, understanding the general trend that market is on, then going to lower time frames and finding a way to jump into the market using the strategy that you are taught. So, for example, now you wake up and you see this thing happening on the charts. You already know that FI, the market is what? Bearish from here down here. There is no need looking for buys in this market. Price was selling. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So what you need to do is, once you know that the pattern that market is on is this, the only thing you need to do is on the lower time frame, start looking for your what, the market structure part of the strategy, start looking for what, the liquidity part of the strategy, and thirdly, look for your point of interest. But this time around, you have a direction in mind on where market is heading to. That way, you can take multiple trades in line with the current direction. You can use small amounts and turn it to a bigger capital just because you understand the direction the market is heading to. Same thing as when I took one gold trade, when I took one gold trade that I turned one night dollars to 14,000, this was it. On the 4 hour time frame, I knew that gold was buying. Because from down here, I kept taking buys in line with the current direction of the market. I knew where market was heading to. So I took a buy here, buy, until price completed and then went to the resistance level here. That was when I eventually now closed my trade. That was the trade entry. Turning $190 to what? To $14,000. I started with 190, but I closed some positions as it was running. So came down, but it was 190 to 14,000. Just taking what trades in line with the current direction because I knew what the higher time frames was saying. So I kept taking buys until price came what to the resistance level up here on the 4 hours time frame. So this was 4 hours time frame that I need to know the direction of the market. Then in the lower time frames, I now kept finding trades in line with the current direction of the market, looking for opportunities, knowing that I'm going to be looking for buys, not unnecessary sells in the market. So understanding the current direction of the market on the higher time frame is very, very important. Be it a trend, be it an uptrend, be it a downtrend, and be it a raging market, you always find a way to jump in. The only thing is just to find your strategy, but knowing the direction you should be looking for in the market is very, very, very crucial. There's no way you combine all these things, understanding the general direction of the market first, knowing what market is going to on the higher time frame, understanding, then getting your market structure part of your strategy, be it a structure shift or break of structure, getting your inducement, following all the rules and picking up poor point of interest, then come out and be complaining that you're having issues with the strategy. It's not possible. Trust me. So most people are just lazy. They don't want to keep sitting and analyze. There's no way I'll come out of this market on the 4 hours time frame, open up my charts and see this whole move happening here and I'll be looking for sell. Am I stupid? I'll open up my charts, I'll see this clear uptrend on the 4 hours time frame and I'm looking for sales. The only thing I can do is go to lower time frame and find the ways to join in the buy. There's some what we call logical thinking. Logic said it's supposed to, trading has a lot to do with people being smart. Logic is supposed to tell you that the market is making a series of higher highs and higher lows, that what you should be looking for is buy. But the only time you can look for a buy is when market makes higher highs, make another higher low. If price makes another higher high, you are really expecting market to make another higher low. So on the 4 hours time frame, that higher low is you looking for your buy entries on the downside on the 15 minutes time frame or the 30 minutes time frame. Then you take a buy for market to complete the trend of making another higher high again. It's the logic behind trading. Once you understand that logic of the direction, then you can now go to lower time frame and start using the strategy that you are taught to trade in line with that direction that you know the market is heading to. There's nothing complicated there, nothing more and nothing less. This is what I do. This is the same way everybody trades. Why you guys? I don't understand what are people doing here. So if you have any questions, you can ask me, please. What's going on in this conversation? Let's look at now because they don't understand. So, yeah. Abraham. I can't hear you. Sorry. What's the question?
Regarding the question, is regarding the last trade you took on gold. So
I cannot hear you properly.
Can you hear me now?
Yeah.
I'm asking in regards to the last trade you took. I'm wondering if you took it on the support level.
I think I sent a screenshot to the group now.
Yeah, I know you said that. Yeah, I know you said it, but it didn't give me the much explanation that I needed. So I was just trying to ask if you took it on the support level. Because you marked out with your.
I didn't look for a support level. I just took a trade from a breaker block because I knew that gold was buying. There's no support level or resistance level. Gold is bullish. It's clear here. It's still an uptrend. So I looked for a buy from a breaker block on 5 minutes time. I made a screenshot and I sent it to the group. Gold is buying. It's clear here. The market is moving up. So if the market is moving up, I'm looking for trades in line with what market is saying. So because of it, I'm just looking for buys on gold. So I saw my structure sheet on my 5 minutes time frame. I saw my inducement and then I saw my breaker block and I took this because I knew that gold was bullish. I was still looking for buys straight out on gold. Gold has been bullish since. This is where it happened. Came to a support here and gave a break of structure. Came back to here to the other block and then the buy continued. The buy here, buy another buy. So this last week, another buy here. This here was just to trigger my buy entry, but actually from a breakout on 5 minutes time frame, there's no support. I don't need support from my entries. The thing is just to know the support is just for higher time frame. It basically just maybe forms once, and then I use that market being as a support to start knowing that it's time for market to start buying. Then I'll just keep looking for buys. Say the market gets to probably another zone. I can expect reversal soon. That's just it. I don't use support from my entries. You know what I'm saying?
Yeah, really. Yeah. Please, I want to ask you, in this strategy, do you trade it in line with sessions like the London session and the New York session?
No, I don't care about sessions. As long as I see my entry trading, I just, if I see my analysis and it's correct, I enter, regardless of the session I catch it.
Okay, thank you very much. And again, the last one, please. When marking out this high and low, in the current, in the trading markets, please, I would like you to give me an example on how you mark your, on how you choose the high and low, whereby you are expecting market to get to or to retrace from.
Guys,
maybe
I can't go back to the charts there. I give an example here. If you know the behavior of the market, calm down. Let me explain something to you. If you know the behavior of the market is higher highs and higher lows, you're not going to know the zone is going to come down from just by looking at the 4 hours. The only thing you need to do is go down to lower time frame and start looking for zones that trigger the market structure shift, inducement, and then get your POI there. The whole trend on the 4 hours is just to know what you're going to be looking for in the market. It's not fixed on a zone that the market will return to. That's why you have to start analyzing. Like I said, if I know that price is making higher highs and higher lows generally, there's no fixed pattern that market, there's no fixed percentage on how you return. The only thing you need to do is go down to lower time frames and then start analyzing in line with what you know that you're trading at. You know that market is making higher highs and higher lows, so it's bullish. So you're looking for buys. Go down to lower time frames and analyze and find out where market can possibly return back to by looking for your structure sheet, inducement, and POI. I've been giving examples since we market structure sheet and POI and everything. I cannot go back and start analyzing a trade when you can just still backtest and analyze that trade. Go down to your charts, open up your charts, look for this thing that happened. Then find out where market reacted from after you made that high lows. Find out where the main structure shift occurred from. Find out your reducements and get the POI. Simple as that.
Thank you very much.
Why are people exchanging phone numbers? The group will open after the classes, so yeah. Miller Gold. So
there's something still confusing me about this directional bias sometimes. Understand? There was a trade I took on USD JPY. I don't know if you can be able to open your chart on 4 hours on that USD JPY.
don't really do this, but no problem.
Just do it, boss. No, I don't use okay. On 4 hours. This last candle looked like a breaker. This candle, I don't know if I can point it from here. No, not that one, the other one. No, the other one below the last break of structure below. Now at that point is that candle sitting there is a breaker block candle. Okay, on lower time frame of 15 minutes. Now sometimes I will not see I will not really see that market structure sheet on that 15 minutes. But market, you can see that market sold off from there. But it didn't really show market structure sheet on that 15 minutes, but it sold to that point. I mean, it did like almost 200 to 200 pips around that area. So
this trade on the 4 hour time frame would have caught this trade and you have missed it. When this
yes, I caught it.
When this law got broken, price already gave them a break of structure here. This pullback here is your inducement. Yeah. Then price came out of this breaker. Let me check 15 minutes time frame and then I will see. This is sell.
Yes.
Clearing this time frame. Can go to 13 minutes. Let's see if we clear here. Okay, the only thing I can see here is when this low here got broken. After price broke this low, then I can see this in as well. Then the broker is still there now. Then it's sold from one price coming from here, so back down. The broker.
But I thought that we should look for market social shift on lower time frame, maybe like 5 minutes of, because I actually saw a market social shift on the lower time frame there, but the pullback they didn't get there. I didn't really get there. If you go on 3 minutes or 1 minute,
I don't trade 3 minutes time frame. I've never advised anyone to start looking for social on 5 minutes time frame.
Yeah, I'm just trying to tell you where I saw the market social shift. Like it's in line with 5 minutes. But market didn't really get that block.
To do more time frame analysis and say the one that suits. Sometimes 4 hours time frame can even be the one that suits your analysis better. The thing is just observe market conditions and know the one that's giving you a clearer entry. You cannot come. It says I want 15 minutes time frame. I wasn't seeing anything. I have to go to 13 minutes time frame. That's the point of being an analyst. You have to go switch time frame to see the one that better suits what you're analyzing at the moment. I cannot come on the 4 hours time frame and see a clear direction like this, lower highs and lower lows. I'm seeing my break of structure here. I'm seeing this one, and I'll be going down to 15 minutes time. What am I looking for there? I've seen everything I need to see in the 4 hours time frame. I'll just book my entry there. So if you check a time frame and it's not clear, switch time frames. That's the whole point of being a technical analyst.
Thanks.
Valforms. This Please, do ask your questions and you bring your feelings back and talk. First of all, good evening. Yeah, I can hear you.
Can you hear me?
Can hear you.
Okay, please, can you review the map of the zones, please, good? Because I think I'm a little confused. There are some zones there that I saw you mapped, but I don't know whether it will actually from the 4 hours that you got.
If you have issues with zones, read candlestick Bible. If anybody has issues with zones, market out zones, the only thing I'm teaching, you guys have to understand this is an advanced class. You see all this market structure, change of character, break of structures, other blocks. You guys should have this knowledge already. All I'm doing is to teach you guys on how to implement what you already know. Now, if you don't know how to manage zones and it's still confusing, read candlestick Bible and get acquainted with that, because this is not a beginner's class. This is an advanced class. People that need to get a strategy that you need to work with. You cannot tell me that I have issues with marking zones. That is not an advanced class thing I would say an advanced class. If you have those kind of issues, you need to get candlestick Bible and read it thoroughly. From candlestick Bible that you know how to mark your support, know when price goes to support, know how to mark your supply zone, your demand zone. All these things are in the candlestick Bible. It's a beginner's knowledge that you need to get acquainted with, not something that is in an advanced class. This is something that people really know. Mark your support, mark your resistance, and then wait for price to react from there. But that's not what I'm going to be teaching here. Just read that candlestick Bible. You understand everything. Have you read that candlestick Bible before? Have you read it before? Have you read that candlestick Bible before? Can you hear me?
Yes, I can hear you.
Yes, I hear you. Okay. Question I asked you, why are you muting yourself, man? Well, how ask questions? What which questions again do you people have again regarding this thing? Because I don't understand.
Can you hear me?
I hear you.
Okay, my question is on this directional bias. Once you understand the uptrend phase and the downtrend phase, what you just do is to go on the 4 hours and look for the direction of the market. Then let's say market is on an uptrend. You go on the lower time frame and look for break of structure that is bullish, or you look for market structure shifts that will end up bullish. Is that how we trade?
Yes.
Okay. That's the only question.
At this one, I don't even understand what questions that people have again on this thing. I've literally taught everything I need to teach on this particular thing. It's just left for people to backtest, practice, and forward test. Because at this point, anybody that has, pretty much wants to ask questions just because they want to ask questions. But there's no way that you piece together everything that I've taught now from the first class, the structure sheet, everything, the inducement, the types of liquidity, then pitch everything in with line with those directional bias now and say we're having issues. Most of the questions that people are raising up their hands now to ask, I don't understand the questions because I really don't. If you don't know how to manage zones, if your question is on how to manage zones, please don't ask me that question. Just go and read candlestick Bible. This is not a beginner's class.
About this, I just saw something here on this USDJPY. That place that you marked out that break of structure. Then we see another break of structure again, but markets go up. I see market structure shift here. I don't know if I'm right, but I see something like market structure shift on this 4 hour time frame. If I get it right, yes.
Yes.
Okay. Can you hear me?
Yes, I can hear you.
Okay. Can you hear me? Okay. Can you hear me? Okay. 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 normally mark a little lower highs and lower lows. So here I see lower highs, lower lows, and then the last candle, I think it's created market structure shift, if I'm right.
Yeah. What's up? Yeah, now that's market structure shift. What does that have to do with the topic now?
I mean, since the market is downtrend, like market is bearish on 4 hour time frame, I think if I'm right, maybe market want to change to bullish. That's what I'm asking. If I see things right here.
It's normal. The market does that. It's a normal thing to happen.
Okay. And since today is, can I see this now?
Yeah.
Okay, since today is the last day, I don't know if you have something for us, like maybe if you can please use 5 minutes just to talk on psychology, like something that you that can help us.
Me say the stuff for my own psychology self.
Alright. Thank you, boss.